Daniel, welcome to our podcast.
Thank you for having us.
It's a real pleasure to have you. We've known each other for a very, very long time, and I know you spent a long time in the UK as well before moving back to Mauritius, and you've been back since 5 years now, for 5 years, since 2018. So why did you come back? It's a trick question.
It's always a trick question. The short answer is it was the coincidence of me being a bit unhappy with work in the UK.
Okay.
And
were you in London?
I was in London. I was working in the global business sector back then and being offered a job in Mauritius, which was the catalyst. But I think the real driver was being a young parent. It was soon after the birth of my second child. And really thinking about what sort of childhood I wanted the children to experience. And I thought Mauritius was a place where they could have this, I had this vision of a carefree childhood where they could run around barefoot. Whereas in London, it was all fairly regimental, get into a box, get into a car, put your boots on, go to the park, come back, all very regimented. So it was that combination. But I think there was always an undercurrent of something else, which was about the upbringing. I think from an early age, my mother used to draw my attention to elderly people's hands, especially people who'd worked in manual professions. And she'd always say, these are the hands that built Mauritius, and look at them. They might look a bit damaged, but there's a lot that's been given to the country. And I was always struck by that. And then I went to Royal College Kirpip, and I remember seeing the names of people, the laureates on boards in the hall, and thinking, oh, I know these names. These are people who've are in the history books. And so growing up with this sense of, it'll come to your time to come and give something back and help build the country. So I think this combination of one particular juncture, this sense of what I want for the kids, and maybe an undercurrent of, what I saw as being something I should do for the country, just all coincided into this decision.
Are you 5 years on, are you happy you came back? Was that the right decision? Another trick question.
Nothing is ever clear cut, is it? There's obviously things I miss enormously about living in Europe, the culture in particular. But it is very possible to have an excellent work-life balance here and to be able to go back and travel and actually do much more now when I go on holiday than I did when I lived there. And also there's a lot to do here, so it's probably easier to get a sense of achievement here and to see that you're making a difference. So in the balance, I think we're all happier from the move.
And also, it's also a question of, I remember reading a book recently, and it reminded me of my life back in London, where you're working towards this biannual holiday that you're going to have. Whereas here, it feels like, I'm not saying every day is a holiday, but you're much more able to have this sort of mini breaks, even if it's just a weekend, at the hotel, or just having these little pleasures that, should be what life is about. We shouldn't be aiming to have a holiday once a year where we're, working like cogs in a machine to save for that holiday. So I do agree that the quality of life here is wonderful, especially when you have young kids. So you're chief executive of the Mauritius Bankers Association. For the layman, what is the Mauritius Bankers Association?
So we're, as the name suggests, an association of banks. So we're the voice of the banking sector, 100% private sector. So we're not a government organization. And what we do is to really work towards the development of the banking sector. But we have our own position. So it's not just expressing the interests of member banks. It's as an institution having a position to say we want the banking sector to grow for the welfare of society and for the common good. So we have 4 main areas of activity. The first thing that we do is called advocacy. So that's our dialogue with the regulators and with government. And we talk about changes in law, new regulation, new products. And that's probably the bulk of what we do, about 50%. The second pillar is called thought leadership. And that's really sitting back and thinking, what can we do to improve things? And the main thing we did there was a recent report called The Future of Banking, which is available on our website. It's a strategic review of where the banking sector can grow in the next few years. So that's a huge piece of work which we're now implementing. So that's thought leadership. The third thing is capacity building. It's really training. So we're the representatives of the Chartered Bankers Institute in Mauritius and really trying to equip employees of banks to have the skills they need. And finally, it's called community engagement. And that's really showing the positive contribution of the banking sector to the economy and really engaging with stakeholders. We're a member of a number of international organizations. We're part of the private sector community in Mauritius. So it's really tying in with the other stakeholders. So those are the main things. And in practice, I mean, just it sounds a bit obscure and theoretical, I suppose. I guess what we do on a day-to-day basis is we have a number of subcommittees. So all the compliance officers get together on a quarterly basis and think, how can we improve the fight against money laundering and financial crime? And then we have a number of projects that we execute. We get all the CFOs coming and saying, you know, how can we improve on the quality of our reporting? Climate change is an issue. So we work on all these things and try to improve things.
Are you personally involved in all these subcommittees, or there's someone from the MBA sort of chairing these different groups?
So most subcommittees have a chair who drives things. We're there to support. In some cases, we drive a bit. In others, you know, there's a champion who is piloting that. So at the moment, there's a few live topics. Capital markets is a very hot topic with the new monetary policy framework, so we're meeting actively. But we're obviously supporting all those committees, about 15 of them.
Okay. And going back to the first pillar about advocacy, and I appreciate how important it is to have a voice. And I asked the same question of Samad, who leads the Mauritius Finance. Do you feel that you have a voice that is being heard by the regulators and the policymakers?
We do have a dialogue. And as always, you know, there's a lot we agree on and other things where we might be coming from very different positions. And that's always the way. You know, we're not government and they're not private sector. So they see the world through their eyes and we see the world through our eyes. And what the job actually is to have a respectful dialogue, which is a place where these views can be exchanged respectfully. It doesn't necessarily mean that whatever we ask for we'll agree, but that there can be as much convergence as there can possibly be to reconcile the different interests. So we are constantly invited and part of those conversations. We are listened to. I'm very grateful for that. I'd like to think that we are a respectful interlocutor. And that's important for us. We do have respect for the institutions, but at the same time, our duty is also towards our members and expressing their views. And I guess the short answer is yes, there is a dialogue, but that doesn't mean that on every point we would have our way, far from it. Sure. But I think it's also part of our work to convey the views of government to our members for the membership to understand the constraints that are there and find the best outcome for everyone.
So that's one side of the equation, having, you know, facing the regulators and the policymakers. On the other hand, you have all your members. I mean, everyone knows just how many banks there are in Mauritius, of all sizes, of all, you know, different markets, different focus, huge banks, very small banks. I don't know whether they're all members of your association, so that's the first question. And the second question is, how do you get them to align? I mean, they have such diverse interests.
Well, to answer your first question, there's only one commercial bank, which is not strictly a commercial bank, it's a private bank, Warwick Bank, which is not at present a member. We are speaking to them and we hope that they will come in. But they, as a business, don't necessarily engage with the public. They're a private bank, they do very niche business. Every mainstream bank that takes deposits from the public and lends on, and all the names that you know, will be a member. So that's, I think, 99% of banking assets are with us. But you're absolutely right, we're a very broad church and we have very diverse membership. I remember working in the global business sector and looking at other jurisdictions which might be bigger than Mauritius. I mean, in Sweden, there are only 4 banks as far as I recall.
Wow.
And they have 5 million people and a significantly higher GDP than we have, and we have 20. But when you look into the detail, there's a reason why each one of them is here and is achieving a profit. There is a very diverse spectrum of businesses, and each is best served by 3 or 4 banks in different segments. So I actually see it as an element of the richness of our ecosystem. It doesn't mean that they will necessarily agree on everything, but what our role is to build consensus amongst banks. And again, that's part of the job, I think, which is to try to create this common understanding that we're looking at what we agree on. And there's an awful lot that people agree on. The challenges are the same for everyone. The regulation is the same for everybody. And some issues will be more relevant to some than others. But I think members understand that this is a collective endeavor. They compete very fiercely in the market, extremely fiercely. But when they get together, this is really to think, okay, let's leave aside our differences. What are the things that we can agree on? And this is the role of the MBA, to exactly understand from our members where we can have a common position. And we have a very open board discussion on these topics. We focus on 6 or 7 topics, and members actually are very professional and they're very pragmatic and agree something, and that becomes a position of the MBA. By and large, I find the meetings to be non-conflictual. In fact, they're a pleasure to attend, and it's all very professionally done. So I find myself really privileged to be part of those conversations.
So you've never felt that you had to sort of not take sides as such, but where you have one bank wanting X and the other bank wanting Y, and you felt that there's a sort of neutral arbiter, or do you sort of have to push forward your thoughts and your recommendations and try to get them to align eventually?
It's a bit difficult to speak in the abstract,
Of
but
course.
in general, a lot of our topics will come from our subcommittees. So if there's an issue around combating financial crime, it will have been discussed at the level of a committee. And there will be a recommendation to the board to adopt this or to request that we sign up to a standard or what have you. It will be a recommendation from the board. And typically, there will be questions to the board around this. Do we do A, or do we do B, or do we do C? And the merits of each. And this will be the question posed to the board, and this will be the discussion. Now, what we will try to do is anticipate any polarization that there might be, and in the way we present the discussion to the board, really make it very clear. Some of you might think A, some of you might think B, but the point today is to agree on one thing. And I have to say, the banks are extremely professionally managed, and I do find that our board members have been very good. There have been issues in the past that related to only 2 or 3 banks, which may have been small or medium banks, and the larger banks did not see it as an issue, but mindful of the collective nature, thought, do you know what, we're going to fight for this because a chunk of our membership or a segment of our membership is affected by this, so even though this doesn't concern me, we're going to stand up for this and actually take a collective position. So from my perspective, I find that there's a lot of almost selflessness in the way in which banks approach this. This is what we can do as a collective.
Talking about selflessness, another trick question. What do you think of the rising interest rates in Mauritius? I mean, the reason I ask that is obviously I think the population at large is suffering. The repo rate has increased 3, 4, 5 times over the past 6 months. The consequential effect of this is home loans, all kinds of debt that has been taken, the interest rates have gone up. So do you think this is sustainable for the country? It's
very certainly a difficult one. I think, and as a consumer of financial products, I feel the pinch like everybody else, just seeing what the rise in interest rates has done from a personal level. Before I reply to your question, I just want to clarify one thing, which is that banks are part of the transmission chain in monetary policy. So it is not technically appropriate for us to be commenting on monetary policy because we're part of the execution.
Of course.
So whenever there is a move or an action from the regulator, the monetary institution, the central bank in this instance, we will execute that without commenting. But what I can do is share my personal thoughts on a few things. We are in a very difficult economic situation where internationally we've had 2 things. We've had direct COVID-related rises in prices, so prices have gone up. And we had a second issue in Mauritius around the FX market, which were very tight, especially the US dollar versus Mauritian rupee issue, which has been complicated at times. And both very thorny issues to resolve for anyone. And one complicating factor has been the US driving their rates up. And you could very easily get to a situation where people in Mauritius would think, I might as well keep all my money in USD because the interest rates are much higher. And if you end up in that sort of situation, then you deprive the market of dollars, and it causes a severe depreciation of the rupee, and that feeds inflation.
And it's a vicious circle.
It's a vicious circle. So it gets to a point where if one of the main currencies in which you deal is undergoing a sustained rise in interest rate, and the dollar is really central to the Mauritian economy, we import everything and most things in dollars, then you get to a situation where you have to keep up more or less so that there is no major discrepancy between the rates in rupee and the rate, because that then feeds into the FX component of that. So I'm not going to talk about the impact on inflation and all that, because that really is for the central bank. But at least from a stabilization of the rupee dollar issue, I feel that it was very difficult not to follow, because otherwise you would end up in a problematic situation. That being said, I think the central bank has engaged with banks to try to see how commercial banks can help their customers who may find this difficult. And I think for what we refer to as the squeezed middle, the middle classes who may be experiencing hardship as a result of the fairly unpredictable. I don't think anybody takes a home loan thinking this will go up by 2% within 1 year. I think banks are being accommodating as far as they can. There are ways of restructuring facilities to just give a bit more time, but reduce the monthly payments. So we always tell people, if it's really bad, then don't wait until it's too late. Go and speak to your bank, and there are things that can be done. So banks are actually thinking about ways in which they can support their customers. There's been a lot of forbearance during COVID, and I think in this phase as well, there's a lot of reflection at the moment in terms of how they can support customers. But this is not a Mauritius-only phenomenon. I think most countries have seen a very steep rise. We're out of the low interest rate phase worldwide. And unfortunately, this is the new configuration for a while. I think we will live with higher rates, and the cost of financing will be higher.
Yeah, and I think certainly in countries like the UK, we've seen near to zero interest rates on home loans for a long time. And so it's been a bit of a shock to the system, and obviously here as well. Related to that, still talking about, a post-pandemic world and people recovering from it, I think we all agree banks have been doing okay. When I spoke to Dr. Ramasitanen when he was on this podcast, he said, it wasn't his personal view, but he said that there's a school of thought that said that it's all too easy to socialize losses and privatize profits. What would you say to those people, and obviously I'm asking your personal opinion on your capacity as head of MBA, for those people who think that, there should be some sort of special tax or levy to help contribute towards rebuilding a post-pandemic Mauritius because they're doing so well?
Are you speaking specifically about banks?
Banks, hotels, these industries who've been sort of posting record profits?
It's a really difficult question, because I don't think there's a magic bullet, otherwise it would be there. I think clearly a lot of enterprises have either directly or indirectly benefited from whatever forms of state help have been given out, and there has to be a time frame within which this is clawed back. I think this is a natural expectation from any lender, and banks are lenders as well. So that and tax plays this crucial redistributive role. I think the difficulties are around timing. When is a good time to do that? Because in the immediate aftermath, if you stabilize things, the cash flows are back to normal, but taxes are usually on profits, and accumulated losses take a little while to filter through. And also any sudden increase in taxation can have a deleterious effect on investment, or can slow down performance and people getting back to the right time. So I'm afraid I don't have a clear answer for you. I think it is very clear that sooner or later, but probably sooner, there will be some sort of mechanism put in place to retrieve this additional funding. But what is a fair way of doing it? I think during the COVID pandemic, new levies, the solidarity levy was put in place partly for that. But of course it didn't apply to corporates, it was on individuals. So what is the fairest way of doing that? I think it's more of a balancing act than one particular measure. But to answer the question, I think the principle is probably right. It's really about the timing and the manner in which it's done.
And how you execute it. I want to come back to you mentioned that part of your role is also thought leadership, and you mentioned a report that you did recently about the future of banking. In a nutshell, what do you think is the future of banking in Mauritius? What came out of that report?
Well, the report is there for all to see, but if I can summarize the main points, I think it makes the difference between the domestic banking and international banking. And in the domestic market, as you know, we're a small country, many banks, as you said. There's a lot of scope around the future of payments. I think we've already seen since COVID that people now use digital payments much more, and we think the direction is a significant reduction in cash and using more digital tools, and we're eagerly awaiting developments on the central bank digital currency. I think this will be a game changer for everybody. So that's the main thing. And secondly, I think more sustainable practices in the domestic market and financing. When it comes to the international business, I think Mauritius is undergoing a bit of a change. We used to be the investment platform for global funds to go into India. Recently, we've become a good place for private equity funds going into Africa, but that's not enough, and the loss of one doesn't necessarily compensate gains in the other. So we really think that the future is around treasuries and really attracting corporates to set up regional platforms, headquarters and treasuries in Mauritius to conduct regional businesses. And the wide range of banks that we have can actually support them. And actually the wider ecosystem is ideally suited to get people to move here and do their businesses. And we've identified some strategies for Asia, non-India Asia, and some parts of Africa.
Like the Far East, you mean?
Correct. Well, you know, there's some emerging, the sort of tier 2 Asian economies. We have a good value proposition for them. You know, perhaps not India and China, but the other countries, I think, could use Mauritius profitably in their dealings with African countries and vice versa. We have all these trade agreements. So there's clearly something to be done there. And then around sustainability and training, I think one of our great wealths in Mauritius is the quality of human resourcing and educational institutions. So we'd like to be a hub for capacity building in Mauritius to encourage really this cross-fertilization between people from those continents and Mauritius. So in a nutshell, these are the main avenues for development. I think there's a lot that can be done and should be done on this. So we're now working on implementing the report.
Okay. And do you think that, I mean, related to that, and given the challenges that, I mean, we haven't really talked about it on this podcast, but just a few words on it. Do you think in implementing this future of banking, the brain drain that we're experiencing at the moment, including in the banking sector, could be an obstacle to achieving this?
We are definitely experiencing a net loss. And I think there are some deep policy issues that need to be resolved around this. The private sector can do something. It can actively promote, it can train, it can have measures of retention. But if in a market there's a shortage and there's a value proposition elsewhere that isn't present here, then it's very hard to fight against the tide. And Mauritius is not the only country when that happened. I remember 5-6 years ago, Luxembourg was the same. There was a shortage of talent there. And people kept on hopping companies, and there was a huge salary inflation. And Luxembourg are now hiring Mauritians.
Yes, it's the other way around now. Yeah.
And they've had a blend of fiscal measures to attract people to stay, and an active recruitment policy around the world. And I think this is a topic that's being very actively discussed with government. And I think we can embrace migration. This is a nation of migrants. There were only birds here. So anybody who's arrived is the product of migration. People come, people go. And perhaps if there's a shortage, we need to focus on training, but that takes time. And also making sure that we can source talent where there is a clear shortage here. So you're absolutely right. This is one of the key areas. I think the banking sector is managing at the moment. It's expensive. It's possibly not quite as bad as in the global business sector. But the principle remains the same. We have a financial services ecosystem, and we need to make sure that it's stable. And I think clearly on the human capital side, there is something to be done.
Last question, Daniel. Looking ahead in achieving everything you wanted to achieve in your capacity as chief executive of the MBA, are there more goals or sort of objectives or targets that you've set yourself that you would still like to do? So say, for argument's sake, in 5 years' time you decide to move back to London. What would you have wanted to achieve by then?
There's a few things. I think we've done quite a lot already in terms of, in my view, improving banking practice. I think people might notice now that if they go for a home loan, in the past, the loan agreements would have a catch-all floating charge.
Yes.
Whereas now you'll find that increasingly most banks don't do that. They just have a fixed charge on the property. And that is the sort of practice that we've been discussing at our level. You don't need to regulate on everything. You can actually help banking practice to improve. The same with, I think, fees and charges are possibly getting more and more transparent and more competitive. We're finding that the methods of payment are getting more competitive. So there's a lot of improvement that we're seeing. I think there's a few more things that I'd like to see in that direction, but the industry, I have to say, is moving well. I think the main challenge remains around the point you've highlighted around capacity. You see, there's two challenges here, which is that the banking industry itself is changing. Previously, you needed people to look at things and put stamps on, and the regulation told you that somebody needs to do something, whereas now you can digitalize the whole thing.
Exactly.
So the law has to change, you can automate everything. And the question remains, what do you do with the people who are working in the sector? What becomes their role? Yes. So how do you train someone today for a job that doesn't exist today? Because 3/4 of what they do will be automated, but what will they be doing? How do you define that role? And this is a very difficult area, because how do you find the course today for some change that hasn't quite happened? So at the moment we're in this strange limbo, and it's difficult to really figure out what we need. Clearly we know that we need more digital talents, more coding, more IT. So I think for me, one source of achievement would be having devised greater clarity as to what that is and put in place the programs that means that in 5 years' time, we have a generation of people coming out with a qualification and stepping into new jobs with the right equipment. And I think that would make a huge difference to the sector.
All the best for the future. Thank you again for making the time to come here today. Keep doing the great job that you're doing. It always gives me great pleasure that, as you said, a lot of us are actually coming back to give something back. Obviously driven by different reasons, but I think it's important that we do give back to the country. So thank you for the work that you do, and thanks for making the time.
Thank you for having me.